All right. Good morning, everybody. Welcome to mobile coaching session here on Facebook Live and also on YouTube. Welcome, welcome, welcome. My name is Patrick France, senior instructor here. Glad to be with everybody. I'm here today to help you all learn how to become financially independent through the use of the VectorVest Stock Advisory app. So give me one moment while I get this set up. I have to get the comments there so I can see those. But if you guys can hear me out there, let me know in the chat or in the comments section. Let me know that you guys can hear me. Just make sure we have confirmation of that. Everything is working fine for you. You guys can hear me, you can see me, and we'll go ahead, jump right into it here today. So there we go. Okay, let me make sure that's it. That is not it. Facebook constantly doing new changes with their setup here, so I gotta find the comments section so that way I can see everybody's comments there. Just bear with me for one moment while I try to find it here. Good morning, Monica. Good morning, Jim. Hopefully you guys are doing well. Just trying to get the Facebook side set up. They keep changing the way everything is set up, so every single week it's a new setup where I have to go and try to find what's going on and where everything is. There we go. Awesome. Found it once, or found it again. So let me go ahead, open that up. Perfect. Thank you guys all for being here today. Good morning, Wahid. Let me see who else. Jose, Carol, Shannon, Mona, Ahmed. Good morning. Hopefully you guys are all doing well. There we go. So I'm getting it all set up. I apologize for the delays, but I am here, ready to go. Just for some reason, I can't see the chat until after the session starts, and then I got to go try to find the chat. So they make it a little bit harder now, but we got it and getting it all set up so I can see everybody's comments here today. Hopefully everybody is doing well. Once again, welcome to mobile coaching session. Today we're going to be taking a look at our stocking stuffers for 2022. We've got a lot of stocks in there, and they all follow a similar theme here. So when we go through those, you guys will see those, or probably notice the theme. There we go. Come on. You guys will probably notice a theme when we get into it there. All right. So now we've got that. Hopefully everybody is ready to go, ready to learn. So let's go ahead, jump right into it. Start off on the very first page here, the market timing gauge, and then we'll start to work our way from there. So for anybody who's not familiar with these sessions, every single Thursday we go live here on both Facebook and on YouTube where we talk about the VectorVest Stock Advisory app. If you're not familiar with it, it's one of the most comprehensive trading apps out there that allows you to manage your portfolio, know when to get into the market, know when to get out of the market, and also helps you analyze any stock out there. So it's really the best, most powerful tool you can have. If you're trading in the market, it's something you don't want to trade without. So starting off at the very top center, as we can see, we are 3 ticks into the yellow, therefore the color guard is neutral, and VectorVest does not advocate buying any stocks at this time. So no surprise there, we see some cautionary signs coming in here so far. And what that tells us is that, even though we saw a big update yesterday, with the Fed announcement, they're going to start the tapering, or they're going to speed up the tapering and potentially start raising rates as early as next year. The markets did rally off of that news, mainly due to the fact that that is one less uncertainty they have to worry about. And that wasn't necessarily the best thing that we need for them, or wasn't necessarily the best news that we wanted. The fact that they are tapering faster and the fact that they're now talking about raising rates just tells us that, if you read between the lines, they know they're a little bit behind the curve. They're willing to let things run a little hot. And even if they started changing or making these policy changes early, like right now, then it would still be 6 months plus before we actually see the effects of them. So with that, that's really the recap from what we saw yesterday. The markets rallied sharply, not because it was a good thing, just simply because it was a relief to finally get that uncertainty out of the way. All right, so as we scroll down, we get to the color guard here, and as we can see, we have the 3 yellow lights across the board. Now the color guard analyzes 3 of our key market timing components here. The first one we look at is the VectorVest composite, or shown as price. It's an arithmetic indexed average of over 9,000 stocks in the US market. And this gives you a better representation on what's actually going on in the market, because it's not just looking at the Dow's 30 or the Nasdaq's 100, but the S&P or the S&P's 500, but looking at about 9,000 stocks overall. The next is the RT, or relative timing. The relative timing looks at the short-term price trend of the overall market. It's cast on a scale of 0 to 2. So above 1, the short-term trend would be up. Below 1, the short-term trend would be down. As we can see right now, the RT still remains below 1. And at 0.85, it tells us the short-term trend of the market is still down here. And then we get to our third column, which is a BSR, or buy to sell ratio. This is looking at the number of buy-rated stocks in a database and comparing it to the number of sell-rated stocks in a database to get an idea on the overall market health. So when there's more sells than buys, as there is now, the buy to sell ratio will be below 1, which indicates overall market weakness. Then these three indicators are comprised to come up with the MTI, or the market timing indicator. It looks at the underlying trend. Once again, it's going to be cast on a scale of 0 to 2. So as we can see at 0.75, the underlying trend of the market is down. Then we get the trend column, which, as we can see, the weekly trend and the underlying trend are still down. No surprise there. And then the last column we want to focus on here is the calls column, which stands for our confirmed calls. Now, our confirmed calls are our last signal we get to get into the market and our last signal we get to get out. So therefore, they're known as more of a conservative timing system that we offer here at VectorVest. So as we can see, we still remain in that confirmed down situation as of today. What's up? Is Santa Rally on the way? Well, we'll have to be patient, wait and see. You know, the news yesterday we saw, Marie, was definitely predicted, but not necessarily the best indication that we wanted. Doesn't mean that we won't see that Santa Claus rally, just means that, you know, we may see a different type of Santa Claus rally than what we're, used to seeing over the last few years. And you'll see that change in the type of stocks that we're going to be looking at here for our stocking stuffers for 2022. You'll start to notice that same general theme as well when we look into those in just a few moments. Morning, Rick. Hopefully you're doing well. All right, so looking at the advanced declines, as always, we always want to take a look at the advanced declines, and we're looking for 2-to-1 bias. So if the major indices are moving higher, we have green lights in the price column, which we don't. We want to look down at the advanced declines to see if today's really a good day to buy. If it is, we'll see a 2-to-1 ratio in the advanced declines. Right now, we do have that 2-to-1 ratio. So we have over twice as many stocks moving higher than moving down. But at the same time, we won't be jumping in yet because we don't have that green light in the price column. Hey, Joe, welcome. Hopefully you're doing well. Hey, if you want to have your stocks taken or analyzed, as always, stick around towards the very end. That's when I'll analyze any stock that you want to take a look at in less than 10 seconds. So for everybody out there, if you want to see your own stocks, if you're not already a subscriber, you want to see how they rank up in the VectorVest analysis, make sure just to stick around to the very end, and I'll get to those in a little bit here. All right, so looking at the major indices, the Dow is up actually 0.7%. The Nasdaq is down 0.5%, but in real time, it's actually starting to dive a little bit more. So down over 1% in current time. Then the S&P is up about 0.25%. VectorVest Composite up about 0.4% for the session so far. All right, so let's go ahead and jump right into our stocking stuffers. This is something that isn't in the app. If you guys want to follow along, just make sure to either take a screenshot or, write them down. You can add them into your own stock advisory app and you can keep track of them there. But let's go ahead, without further ado, jump into it. Now, I will say, part of the reason or part of my thought process when building this list is, I had a few different baskets together. And I was waiting to see what the Fed said because that could have a great impact on which way the markets head going forward. Also, what types of stocks can really thrive. After watching the Fed report and listening to Powell speak yesterday, obviously we know inflation is not transitory anymore. They're now accepting it as something that's going to be here to stay for a while. Also, with the rise of interest rates, that can definitely change the outlook or the landscape that we're going to be trading in. With lower interest rates or higher interest rates, that is going to hurt more of the tech sector, which has, been thriving over the last 12 plus years on low interest rates. And it's going to slow that down because they're not able to borrow cheap money anymore. So therefore, I'm going to be most likely staying away from that area of the market and looking at stocks that are more, I guess if you want to call them value plays. So stocks that are undervalued, getting a bargain for, benefit from either a dividend or, some sort of aspect of the market that will really thrive in a higher interest rate, higher inflation environment. Because unless something drastic changes over the next month or two, I think 2022 is definitely going to be a year that we're going to be seeing more stocks that are thriving because of the environment that we're in rather than anything else. So without further ado, let's jump right into it. Stocking stuffers 2022. And first and foremost, Pfizer comes in as our number one. So right now, as always, whenever you put a watch list together inside the VectorVest Stock Advisory app, it'll automatically rank the stocks by our master indicator VST, standing for value, safety, and timing. And so therefore, it'll automatically bring the best candidates to the top and the worst candidates to the bottom. So this is just a mixture of different stocks. We'll talk about each individual one. It's about 12 different stocks so far, but we'll talk about the different versions or different reasons for them and why they made the list here. Khan's asking why tech stocks, not other areas. So, tech, more aggressive, more growth stocks. A lot of those growth stocks tend to thrive. So biotech, tech, those areas are more impacted by interest rates rising than other areas, because those longer term companies are companies that are more like what we're going to see here, aren't really trying to grow as fast as possible, borrowing a whole bunch of money constantly to put back into the business and to grow as fast as they can. So you do have a bigger influence on rising interest rates in the tech area or the more aggressive plays. All right, so first and foremost, Pfizer. Looking at healthcare, looking at biotech, this is about the only one that's going to come from here. And the reason why I like this is breaking down the analysis. First and foremost, starting at the very bottom, we'll go through these 4 indicators. For anybody who's not familiar, these 4 indicators at the bottom are all cast on scales 0 to 2. So above 1 is good, below 1 is bad. Starting off with the very first one, the RV or relative value. This is looking at the long-term potential over the next 1 to 3 years. So at 1.54, we expect to see this outperform over the next 1 to 3 years. The RS is the relative safety, which is simply an indicator of risk. So above 1 tells us less risk, below 1 would tell us more risk. At 1.21, that shows less risk involved in this stock, which means good, consistent fundamentals. That means they're beating earnings quarter over quarter, year over year. Third is the RT or relative timing. So this is a short-term price trend, more of that technical indicator. At 1.68, it is in a really strong uptrend right now on a short-term basis, which brings a little bit of concern on a temporary basis. But overall, the longer term, I'm definitely looking forward to seeing what this can do. And then so overall, the stock is favorable with a VST rating of 1.5, which combines the RV, RS, and RT all into one simple to read indicator. So you may be asking yourself, I just said, these types of areas tend to not thrive as much whenever we have a rising interest rate environment, but this is why it made the list. So let me go ahead, change my graph, and add on earnings per share here at the bottom. Maximize it. So you'll notice a lot of similarities between some of the stocks that we have here. The price has been steadily rising. You did have some lulls, throughout April, throughout the spring and summer, but coming into the fall, we're seeing it starting to ramp up. Actually, 1 year. Here we go. So, excuse me. So looking at a 1 year, didn't realize it was default or went back to the 5 year. So looking at a 1 year, nice steady rise in price, earnings steadily rising, but you're seeing this ramp up in earnings over the last quarter or so. This is a nice sign. This is not only just looking at the physical number or the historical number that they just released, but it's also taking into account a 1 year forecasted earnings per share as well. So when we're seeing this big jump, that tells us not only is the stock making money and they're beating their earnings, but the major money or big analysts out there are expecting them to continue to outperform and beat their earnings 12 months down the road. It's something unique here you're only going to find at VectorVest, and that's really what gives us that extra insight to find these high probable winning candidates here. Franklin's asking, is there any talk at VectorVest with regards to allowing users to have mobile app open while also using the desktop app. Unfortunately, not Franklin. That's something that's been asked for quite a while. It has to do more with the exchange agreements more so than us. So unfortunately, that's out of our control. It's been that way for years. I even brought it up when I was first starting here at VectorVest over 10 years ago. I agree that it's not the best. It's not the most ideal, but there is something that has to do with the exchange agreements. We would love to, but unfortunately we can't do that. It's not in our control to be able to do that. Will this list be available in the app? So no, this is a custom list that I built together. So if you want to add it, you can take a screenshot or, just write all the symbols down. You can put it in your own mobile app. All right. So Pfizer, this is what I liked about it. Not only is the stock growing, the earnings are steadily ramping up, but when we go back to that 5-year, look at that nice steady rise in earnings and look how it's starting to spike over the last, just quarter or so. And so that huge run up in earnings is something that, I really like seeing because that's going to be the engine that drives stock prices higher. And so if earnings can outpace inflation, then the company is still profitable. And that means the price of the stock will still continue to thrive and still continue to go higher. So therefore, I'm really looking at earnings. I'm looking for more of the fundamentally sound plays, more so than, the stocks that have a lot of aggressiveness or speculation involved. So that's going to be really the theme that we look at throughout this list going into 2022. So Pfizer, I like the look. I like the play. I like seeing that earnings ramp up here. So that's going to be number one. Let's go back up. Locked me out. Apparently I talked too long about Pfizer. Can use the desktop program and the app at the same time. John, if you're able to use the desktop and the app at the same time, that tells me that you are most likely using 2 different accounts. And if that wasn't on purpose, give our support a call because you should only be using the same account for one or the other. And if you're using 2 different accounts, that means you have 2 accounts set up. It means you're paying 2 different subscriptions. So give our support a call. Let us figure it out, figure out what's going on because you shouldn't be able to use the desktop and the app at the same time with the same login credentials. All right, getting back in my watch list, going down. Here we go. So the next one, new, steel. With the infrastructure bill and the current presidency trying to find every single possible way to tax everybody and to make everybody else pay for his infrastructure bill. He seems really gung-ho on it. That's going to see a lot of push for the growth for the infrastructure, the Build Back Better, whatever it is, the BBB, whatever that plan is. And they're going to need steel to build it. If they're going to be building roads, buildings, construction in general, they're going to need steel regardless of whether it's clean energy or whether it's, or current energy that we have like petroleum, oil, that kind of thing. They're going to need steel. So therefore, this is one of the best looking performers so far. Has great long-term potential, less risk associated with it. The timing, it is above 1.1, which is my typical line in the sand, but not by much. I'd like to see that timing pick up a little bit. It's been moving sideways. Could be one to keep an eye on. Maybe not jump on quite yet, but wait for it to break out of that sideways move. Overall, though, good rated stock. Looking at the earnings, so this is a 1 year. Let's go zoom in. We see the same situation, maybe not as drastic as what we were noticing with Pfizer, but same situation. Earnings were relatively flat, moving slightly higher, but now you're starting to see earnings ramping up coming into the last 6 months or so. When you go look at the 5 year, and this has been part of the test that I did, is I was looking at the 5 year, 1 year, and 5 year graphs to see if these stocks are getting that same pattern where you're ramping up in the earnings per share at the bottom, which shows that the stock is not only making money, but once again, experts and analysts expect them to continue to make money, and it's all about the perception. So seeing that big spike in earnings per share is definitely a favorable thing going into 2022. All right, so that makes number 2. Let's go take a look at number 3, EXPR. So I believe this is a REIT, if I'm not mistaken. Let's go ahead, double check. But yes, this is a real estate investment trust. So it is a REIT. Therefore, it's going to pay a dividend. You can come down here, get the dividend information. Where is it? Annual dividend of $5 a share, annual dividend yield of 2.34, so above 2%. And anything that has a dividend, I was preferring to stick with stuff that had a dividend greater than 2%. So that's part of the reason why I made it there. And then if we go look at the stock graph, same situation. Let's go to a 1 year. 1 year, price is steadily rising from bottom left to upper right. Also, earnings are starting to ramp up even more so. When we go look at the 5 year, same situation. Nice steady rise from bottom left to upper right. Earnings are really starting to ramp up here. So I like the look. It met the 1 and 5 year look. Earnings are looking good and it pays a nice dividend. So, of course, that's going to make it to the list. WMS, Advanced Drain, is another one. Great long-term potential, less risk associated with it, nice steady uptrend, overall a favorable stock. Scrolling down, taking a look real quick at the information. Where's the dividend? There we go. So dividend yield was a little bit lower with this one at 0.33 or 44 cents annualized. But this stock is currently undervalued just slightly, so overall fairly valued. You're not paying a premium for it right now. And if we go look at the graph, let's go take a look at the 1 year. 1 year, nice steady rise from bottom left to upper right. Price steadily earnings steadily rising as well. When we look at the 5 year, nice steady rise in price, nice steady rise in earnings. This is going to be more of that smooth, steady, consistent play here. Also, earnings starting to pick up a little more right now, but not nearly as much as we saw with the first couple. O'Reilly. So auto parts. I was looking at AutoZone AZO. It was about $2,000 a share, but I like the area that this is going to be in. With rising inflation, rising interest rates, people are going to start learning how to do things on their own more so, and that means taking care of their cars. Well, we've seen there has been a chip shortage, there has been a supply shortage in autos, and we've already seen a lot of people going out buying new cars after they've been locked up inside for a year and a half. And now that people have these cars, they're not going to take them to the stores unless they got some really good deals, which most likely they didn't. They're not going to get those extra packages that they used to sell at the auto manufacturers stating, hey, if you pay us $500 extra, we'll throw in all the maintenance for the next 3 or 4 years. So people are paying premiums for their cars just to be able to get them. And therefore, if they're going to have to do any repairs such as brakes or oil, anything like that, people are most likely going to start putting in the time to learn how to do it themselves rather than taking it and having to pay even more than what they were paying already. So I like the O'Reilly, AutoZone, Advanced Auto Parts. This one I like just a little bit better out of all three of them. It was right in the middle of the price range between the three, but I like the chart the best out of all three of them. So that's why this is going to make the list for the secondhand store or the car supply parts store pretty much. But overall, looking at the analysis, great long-term potential, less risk associated with it, really nice steady uptrend. So overall, this stock is favorable. Taking a look at the graph, a nice steady rise from bottom left to upper right. So more of that conservative play. 1 year, same situation. Getting into the next, financials. SIVB, one of the best looking banks that I was able to find, but this one, good long-term potential, less risk associated with it. You have a nice steady uptrend, slow, but nice and steady nonetheless, and a good VST rating. Coming down here, no dividend on this one, but with banks and rising interest rates, that can really help banks out, which is going to play a big part in what we see on the next bank candidate that we have here. But this one had a pullback recently. You have a double bottom on a short-term basis. Let's go ahead and zoom in. So I like the fact that it's holding this short-term support here. Let's go. Bring that down. There we go. So I like the fact that it's holding that support that we can see there. Earnings are steadily rising, and with rising interest rates, banks are definitely going to be a big important part of what we see here going into 2022. Asif, you read my mind. But yeah, going to the 1 year chart, nice steady rise in price, bottom left to upper right, earnings steadily rising from bottom left to upper right. Taking a look at the 5 year, same situation. Price steadily rising from bottom left to upper right, earnings steadily rising. They did have a pullback, but now you're starting to see a ramp up in earnings coming in over the last year or so, and that's definitely a favorable sign going into 2022. So third, TSM. Now, I know you guys are going to say this is the semiconductors, this is tech. Why would you put that in there after what you're saying? Well, look at that earnings rising over the quarter of the year. It's been moving sideways here. I'd really look at this one for a breakout play more so than anything else. Or if you're trading credit spreads or iron condors, this would be a good one because it's been in a tight channel. You have rising earnings. If it breaks that channel, obviously change the strategy for the time being or at that point. But, based off the current sideways move that we've seen, this would be a great options candidate to take advantage of. But looking at the 1 year, 1 year price doesn't look great, but that earnings are what we're really focused on with this one. And then going into the 5 year, you see a ramp up in earnings, and that's exactly what you want to see. Price has been moving sideways, had a great run up, back around the middle of 2021, summer of 2021. Now it's moving sideways. Let's see if we can break out of that, start to move higher. But the reason why I really picked TSM, coming down in here and looking at the fact that it had a dividend. Out of all the tech stocks I was looking at, all the semiconductors, not a lot of them paid that great of a dividend. This one has a dividend growth, of 13% a year, dividend yield of 1.25%, overall annualized dividend $1.50 per share. So, yes, it gives you a little exposure to the tech aspect or the tech sector in the market, but at the same time, it also has that dividend, so it can help you ride that out a little bit better. And so you have some exposure, but not a lot of exposure coming into 2022. All right, so TSM was my only semiconductor play in here, and that's why is because it paid that dividend as well, and the earnings ramp up that we were noticing too. So here you go, Asif. Bank of America. For anybody who knows me, knows that Bank of America is by far my favorite bank stock to trade. They're located just right down the road from us in downtown Charlotte. And this one, good long-term potential, solid fundamentals. Timing is just basically flat. But as we saw last time the Fed tried to raise interest rates, what was that? Back in 2016, 2017, right around that time frame. As the interest rates start going up, Bank of America, out of all the major banks, stands the most to gain in a rising interest rate environment. So of course, if interest rates are on the table for 2022 and they actually start raising rates in 2022, expect Bank of America out of the major banks to be the one to win or to benefit the most from rising rates. So of course, they had to make the list going into 2022 with the expectations of rising interest rates going forward. Norfolk. So back to the more conservative plays here. Good long-term potential, less risk associated with this one. Nice, strong uptrend on a short-term basis. Overall, the stock is favorable, coming down. Pays a dividend, 1.5%. Not bad, not the greatest, but not bad. It's basically fully valued right now, so you're not really paying too much more than what this stock should actually be worth currently. And if we look at the graph on a 1 year, nice steady rise in earnings. Price really not reflecting that rise in earnings quite yet. You've had a slight pullback. You have a level of resistance coming in. Where is that? Let's go ahead and put it right here. Got to find it. There we go. Coming in right around, where is that? $2.90 a share. So you've hit it once, you've hit it twice, and coming up for a third time with the higher lows and a level of resistance right there, this could be a good entry point looking for that breakout with that nice rise in earnings. Looking at it on a 5 year, starting to see earnings ramping up over the last year as well. This is a good look. I like what we're seeing with this one. And also transportation, regardless of what goes on, transportation is definitely a essential in the U.S. economy and the U.S. market. So of course you have to have more of those conservative plays. So that was Norfolk. Now getting into a couple of speculative ones here. And starting off with AXU. For anybody who's not familiar with it, this is a gold and silver miner. And the reason why is because historically with rising inflation, gold tends to be known as that gold or inflationary hedge, if you will. So as inflation tends to go up, so does gold. Now, I know right now, we know gold prices aren't really going up all that much. In fact, they're going down. anybody who watches the daily color guard report on Mondays when we analyze gold and we give you the long-term outlook on gold knows that the Huey is showing some short-term bumpiness or choppiness, if you will. But it looks like it's starting to hold. The RT on the Huey is still moving up nicely. And if inflation continues to go up, we see interest rates start to go up, we could definitely see gold starting to take off. And it was hard finding some good gold miners. These are going to be more of that bottom fishing mindset, if you will. But the reason why I like some of these gold miners is on a longer term basis. This one, you have support down here right where it's at. You have a double bottom on a temporary basis. But then on a right around, where is it? $1.50 or so, you have support. So at $1.50, you have support on this one. This is the only one on a 5-year basis where earnings are still starting to still steadily climbing or moving sideways, where a lot of the gold and silver miners were all starting to see pullbacks in earnings recently. So this one I liked for the fact that earnings are still moving higher. You have a nice support resistance zone right at the $1.50. I know it's a lower dollar stock, but that has a lot of upside potential. You have higher lows still being formed on a 5-year basis. So on a 5-year basis, yes, it's a volatile play, but coming into potentially higher inflation data coming out, throughout 2022, we could definitely see a ramp up. So this is more of the speculative play for 2022. And then Newmont, more of the bigger miner, more of the commonly known miner here. Earnings over a 5-year basis have been rising. As you can see, they have been pulling back just recently, which is a common theme among most of the gold and silver miners. But overall, I like what we're seeing with it. You do have some support right where it's currently trading at. Off of those highs, if we can hold that support right around 55 or so, roughly, if we can hold that, bounce off of that, there's a lot of upside potential still left. So these are more of a technical play just on a short-term basis for the fact that, they have some support, some long-term support resistance zones where they're trading off of. And with rising inflation, if history has any way of repeating itself coming into 2022, we could definitely see gold and silver starting to take off. Now, once again, that is speculation. Wait for those, true signals to start jumping in, or to start really showing themselves before jumping on board. But I like what we're seeing, and we want to make sure you guys are prepared and rather have it, not need it, than need it, not have it. All right, and then last but not least, Lucid. So I know I was going to stay away from the tech sector for the most part, but with the rise of electric vehicles, with Tesla, going gangbusters and seeing so much bearishness on Tesla as of late, or just recently with Tesla, Elon Musk selling, billions of dollars worth of his own stock. I see Tesla taking a breather for a while. Maybe not, a huge drop, maybe not a huge pop, but could be just some sideways movement, some capitulation or consolidation going forward. And so Lucid Motors has been one of the most popular names in the electric vehicle space. And they just started production this fall. They started in September. Their first deliveries were in October. With the merger that they had with Churchill over the summer, that cleared up all their financial issues. So now instead of being in debt and wondering when they're going to close their doors, they now are flush with cash to be able to support operations and keep it going. So I like the promising outlook of what we see with Lucid going into 2022. Out of all three of them, NIO, Lucid, Rivian doesn't even produce cars, so I'm not going to include them right now. Until they actually produce a service or a good, they're not going to make the list. But out of Tesla, NIO, and Lucid, I like the prospects for Lucid. I know it is more of a speculative play, but with all the new cash they just got infused with all the new, with production finally starting to take place, this could be a great year going into 2022 for them. So this is more of a speculative stamp or play, but positioning itself really, really well to outperform by end of year compared to the other major 3 electric vehicle makers that we've been talking about. All right, so that's going to be my list for 2022. These are the stocking stuffers. Once again, if you want to take a screenshot, you can take a screenshot there. So Pfizer, NUE, EXR, WMS, O'Reilly, SIVB, TSM, BAC, Norfolk, NSC, AXU, NEM, and Lucid. So those are going to be my stocking stuffers for 2022. If you notice, compared to what we were at last year, these are a lot more conservative, a lot more focused on dividend, a lot more focused on value, making sure these stocks are for the most part undervalued, a lot more focused on earnings, more fundamentally sound stocks. Whereas last year we had some speculative plays, we had more aggressive plays in the list. And this year, we're going into 2022, going forward, we definitely want to slow it down a little bit and really reevaluate what can do well in a high interest rate, high inflation style of environment. And those are the stocks that we've come up with that could very easily thrive in a high interest rate, high inflation environment. If you want to have your company go up, you have your earnings outpacing inflation. If inflation is going up, or if the inflation is rising faster than the earnings are rising, then that stock or that company is actually losing money overall. So therefore, that would give them a negative real earnings per share, which means the stock price will most likely go down. So that's why we're focused on these fundamentally sound stocks that can really help outperform going into 2022 with the conditions that we see so far. All right, so hopefully everybody's enjoyed that. If you guys have any questions about any of these, feel free to ask. I see a lot of people liking these stocks so far. I've seen some love for WMS, also seen some love for Lucid, and what was the other one? NUE. I saw a lot of people liking NUE. So hopefully you guys keep this list on your radar. Keep an eye on them. Look for some good opportunities to jump on board at those. Whew. All right. So with that, now that we've covered that long list of about 13 different stocks, let me know what stocks you guys want to see, and I'll start to analyze them here for you. I know there was one that came in a little bit ago. Let's see. UMC. So UMC, let's go ahead and pull it up. All right. So looking at UMC, this stock has good long-term potential, has less risk associated with it. You are in a slight uptrend, however, below that level of 1.1 that I tend to prefer. Overall, the stock is favorable, good fundamentals. I'd like to see that timing, or just be patient, keep a closer eye on that timing there. Let's see. AGDI. ADGI. There we go. ADGI. This stock, for some reason, why does this sound so familiar, Jay? Did it come up in Jockey Club? Where did this stock come from? Maybe it's the fact that I've seen it show up in the Daily Boomers. The symbol is very familiar. I can't remember. I can't put my thumb on where I found it though. All right, but this one is a speculative play, no surprise. Poor long-term potential, a lot of risk associated with it. It's up 100% here today, but the RT is still below 0.1 even. So on a short-term basis, even with that big move that we've seen where it's doubled in price in a single day, it's still falling like a rock overall. So therefore, the stock is not favorable. Now, if you're a day trader, yeah, you may be able to take advantage of it, but if you're not, probably going to pass on that one. All right, ZIM. ZIM, good long-term potential. A little bit more risk associated with it, though. Overall, the stock's short-term price trend is flat. The stock is favorable, but I'd definitely be keeping an eye on that timing there. If you're in it, definitely focus on RT. If you're not in it, wait for that RT to cross above 1.1 or more before jumping on board. Real quick, just taking a look at the 1 year. 1 year looks good. Price is steadily rising. Earnings are steadily rising. 5 year, price is steadily rising. Earnings are steadily rising. Let's see, BLDR. BLDR, good long-term potential, less risk associated with it, really nice short-term uptrend. So overall, the stock is definitely favorable. I thought about adding this to the list, but I like some of the other candidates a little bit better. It's still a great, phenomenal stock. But with that short-term momentum that we've seen, I don't know how long we're going to see that continue before you have, some profit taking occurring. At that point, maybe, but right now, it's moving too fast to make the list for the whole year. I was trying to focus more of the longer term rather than just that short-term move going into the beginning of 2022. All right, NVMI, good long-term potential, less risk associated with it, really strong short-term uptrend. So overall, yeah, this stock's definitely favorable. EXROF, there we go. This one is a speculative play, but poor long-term potential, a lot of risk associated with it. You have a short-term steady decline. Overall, the stock is not favorable. But on the note of XRO, if anybody follows their Reddit page, there's a lot of videos that they got posted of a motorcycle, a Humvee, and a Polaris Ranger all hooked up, all electric vehicles, all hooked up with the XRO technology. And those videos are pretty sweet. So if you haven't seen them, go check those out. This technology is set to absolutely change the industry as a whole, and I'm looking forward to it. So I like the stock, still in it myself. Stay in it until we finally see that news coming out and that the sales coming out. All right, so UPST. For anybody who followed a guy that talked about this stock on TV and when asked what this stock does, he said, "I have no idea." Stay away from it. I've said that since day one, since this stock first started making the main headlines. This is why you don't follow the talking heads on TV, especially when they're just pumping a name and have no idea what the company actually does. So this one, good long-term potential, but does have a little bit more risk. You're steadily free falling like a rock. Therefore, the stock is not favorable. MRO. Good long-term potential, a little less risk than the average stock out there. You do have a short-term uptrend. Overall, stock's favorable. LEU, good long-term potential, but a little bit more risk to get to that potential. You have a steady decline in price, so right now is not the time to be in it. Overall, the stock is not favorable. Let's see, EGBO. EGBO. Not finding that one there, Jay. T. Let's go ahead and take a look at AT&T. Good long-term potential, but does have more risk associated with it. You have a steady decline in price, therefore it's not favorable. EPAM. EPAM, good long-term potential, less risk associated with it. However, the timing at 0.96 tells us right now it's not favorable. Overall, it's a good stock, just not the right time to be holding on to it. Let's see, CLDF. CLFD, there we go. Good long-term potential, less risk associated with it. You have a really strong short-term uptrend, so overall, stock's definitely favorable here. Let's see what else we got. AMBA. Good long-term potential, less risk associated with it. You are in a steady short-term uptrend, even with the drop here today. Overall, it's favorable. I'd just keep an eye on that RT, though. QCOM, COM. Good long-term potential, but does have a little bit more risk associated with it. You do have a strong short-term uptrend, so overall, the stock is favorable. Hey, Jay, it's all good. I know all about having fat fingers. Even upgrading to the bigger screen like you guys are seeing here, I still fat finger it from time to time. All right, Mara, MARA. Great long-term potential, but does have a little bit more risk associated with it. You're in a steady decline right now, so overall, it's a good stock, not the right time to be long in it, though. Lulu, LU. Good long-term potential, less risk associated with it. However, not the right time to be long in it. Overall, it's a good stock, just not the right timing on it. DVN. Good long-term potential, but a little bit more risk associated with it. Nice, steady short-term uptrends. Overall, stock is favorable. HZO. HDO, good long-term potential, less risk associated with it. You have a nice steady uptrend, so overall stock is definitely favorable here. SDIG. SDIG, good long-term potential, but does have more risk associated with it. Just like with MAR, because it's in the same space, you do have a steady decline right now in price. So overall, stock is not favorable. Hey, Ivan, that's just the data. I apologize if that's not what you want to hear, but I'm not gonna lie to you guys. At least you know I'm not gonna lie to you. I'd rather tell you the truth, even though it hurts sometimes, than lie to you just to make you feel good. All right, R&R, average long-term potential, good safety though, so less risk associated with it. You have a nice steady uptrend, so overall the stock's definitely favorable here. XP, good long-term potential, but a lot of risk to get to that potential. Timing is of the essence. So right now is not the time to be long in XP. Overall, stock is not favorable. BABA. Personally, I wouldn't touch anything out of our that is not a U.S. company, especially a mailbox down in the Caymans, even though the Caymans are phenomenal. I love the Cayman Islands. I wouldn't touch a stock that has its company based out of a post office box in the Caymans. This stock has poor long-term potential, a lot of risk associated with it. You're in a steady decline, so overall stock is not favorable. UMC, I did UMC already. We'll go ahead and take a look at MU. MU, good long-term potential, less risk associated with it. You have a nice steady short-term uptrend, so overall the stock is favorable. Looking here, dividend yield of a half percent, not great, but with rising rates, I'd be careful with this one. That is one thing I will say is be careful with rising rates. All right, FLGT, good long-term potential, but a little bit more risk to get to that potential. Right now, the short-term trend is up, but not as much as we'd like to see. 1.1 or higher is my personal preference. At 1.08, just slightly below that cutoff line. Overall, good stock. I need to see that timing pick up a little bit more, though. Let's see, CVS. CVS, a little bit better than average long-term potential, about average risk involved with it. You're in a steady short-term uptrend. Overall, the stock's slightly favorable. Average, I'd really call that average since it's, just barely above the levels of 1 on pretty much every single indication there. All right, Crocs, CROX. I thought about adding Crocs into the list, actually. This was one that almost made the list. I held off on it. It's still a good stock. Great long-term potential. Just with that short-term pullback, it may take a little bit before we start seeing it get going again. But this one has good long-term potential, less risk. The timing is what is off. The timing is hurting this one the most right now. Overall, it's a good stock, just not the right time to be trading it. Let's see, CRM. CRM, okay long-term potential. Solid fundamentals though. So less risk associated with it. Solid fundamentals, but once again, timing is off. It's a tech company. Therefore, coming into higher interest rate environments, be careful with tech for 2022. It's the main theme for what we noticed with our stocking stuffers for 2022. Timing is just not right. It's a good stock, just not the right time to be in it. Let's see. We did SDIG just a second ago. Jay, Riot, RIOT. So Riot, good long-term potential, but does have a lot of risk associated with it. You're in a steady decline. No surprise, just like Mara and SDIG. You're in a steady decline there. Overall, average stock, need to see that timing pick back up. Shop, SHOP. Shop, good long-term potential, less risk associated with it. However, the timing is off. Tech company, timing is off. Average performance on a overall basis. Need to see that timing pick back up though for sure. FCX, good long-term potential, but to get to that potential does have some more risk associated with it. You're in a steady uptrend. Overall, stock's definitely favorable here. ABBV. Also, if you guys have been enjoying yourselves today and you haven't already hit that like button or subscribe to the YouTube channel, make sure to go ahead and hit that subscribe button right now. Hit that share button if you're on the Facebook side. share this out with all your friends, family. Make sure you share it publicly so it actually gets out rather than just on your own personal feed. But share this out if you're enjoying it, so that way it helps us continue to grow this amazing community. Also helps us out with the algorithms to make sure that, other people who may be experiencing issues or troubles managing their portfolio can find the help can find the help that they're looking for. All right, so ABBV, good long-term potential, a less risk associated with it. You're in a nice steady uptrend. Overall, stock's definitely favorable here. Let's see, where are we at? VLTA, speculative play, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable right now. Thank you very much, Lewis. Glad you could be here today. Glad to have you here. Let's see, what else have we not taken a look at already? GM, sure. GM, good long-term potential, less risk associated with it. Basically, the stock's flat on a short-term basis. Overall, stock's better than average, but not by much. I love GM. Anybody who knows I drive a GM car. And I like the stock. I made a lot of money off it when we got the GM car a while ago. But right now it's just not the time to be in it. AA, Alcoa, the very first stock. Little tidbit for you guys. Maybe I'll make this a bonus question sometime for bonus points later on. But Alcoa was actually the very first stock I purchased when I set up my first own trading account by myself. Held on to it for a while. Broke even, made a little bit on it, but yeah, Alcoa was the very first stock I ever traded on my own portfolio. I wish I held on to it. I wish I had the smarts to hold on to it at that point. But, young 20-year-old kid, of course, you're not gonna hold on to the slow, steady grinders. Looking back on it, wish, hindsight's 2020 on that one. So let's see, good long-term potential, a little bit more risk to get to that potential. It's in a steady uptrend. Overall, stock's definitely favorable. Let me make sure. AQST, poor long-term potential, a lot of risk associated with it. You do have some short-term momentum behind it though. But unfortunately, not enough momentum to make the stock favorable. So therefore, overall, the stock is not favorable here. Let's go ahead and break down the chart. That's on a 5-year. Let's go to a 1-year. You do have potentially higher lows being formed here and here. 630 right now, it's trading at 570. So you got a little bit of upside potential before you get into some new resistance. Let's see. No earnings per share data. Be careful with that. But yeah, so you do have some potential, but just be cautious with it. Know that you're playing a speculative play. Adjust your plan appropriately to trade that speculative play there. All right, AM. Thank you, June. I love the name. That's the name of my grandmother, so I love the name June. Thank you for hanging out with us. Hopefully you're enjoying yourself today. All right, so AM has good long-term potential, but does have a little bit more risk associated with it. You are in a steady decline. Overall, the stock is not favorable. And yeah, after I finish analyzing these stocks for you guys, I will show you the stocking stuffers list one more time for anybody who tuned in late who may have missed it. I will point that out here in just a few moments. So let's get through analyzing these last few stocks, and then I'll show you guys one more time for anybody who tuned in late that still wants to see those stocking stuffers. All right, so TSLA. There we go. TSLA. Good long-term potential, less risk associated with it. However, you are in a steady decline. Overall, it's a good stock, but not the right time to be long in it. When the guy who owns the company is selling the vast majority of his shares, something's got to be, it's going to take a while to get those back. Let's go see PLTR, Palantir, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable. Let's see, Ford, good long-term potential, a little bit more risk associated with it though. You are in a steady uptrend. Overall, the stock is definitely favorable. Jay, there is no wedges on today's stocking stuffer list. Unfortunately not. Maybe next week though. Let's see. Thank you very much, Joseph. All right, so let's get the last one on here, VRTX or VXTR. Oh, I'm pretty sure VRTX. Oh. I think this is the one you're talking about, Corlin, but let me just, if I'm not right with that one, go ahead, correct me, but VXTR is not a symbol, so I'm assuming this is the one you're looking for. Not sponsored though, so I'm not showing it, Drew. Not sponsored. Until I'm sponsored, I'm going to stop showing it on screen. I'm going to start putting duct tape over it, I think. And then you guys won't know what it is. So VRTX, you have good long-term potential, less risk associated with it. You do have a steady increase in price on a short-term basis. So overall, the stock's definitely favorable. All right, I'll do two more, and that'll be it. So two more, let's do Square SQ. So Square, good long-term potential, but does have a little bit more risk associated with it. It is in a steady decline, coming from the tech space. No surprise with what's going on in the economy right now. Overall, the stock is not favorable currently. Let's go ahead and do one more. ASAN. ASAN, you have poor long-term potential. You have a lot of risk associated with it. You're in a steady decline, so overall, the stock is definitely not favorable. All right, so to show you guys one more time, let's go in stocking stuffers. If you guys want to write these down or screenshot it, feel free to. These are the stocking stuffers for 2022 for you guys to add to your list, keep on your radar, and look for some decent opportunities in them. So Pfizer, NUE, EXR, O'Reilly, WMS, SIVB, TSM, Bank of America, BAC, Norfolk, NSC, AXU, NEM are more of the speculative plays with gold, and then Lucid out of all the different electric vehicle manufacturers, that is my personal pick on who's gonna perform the best for 2022. So that is the list. Screenshot it, write them down, whatever you need to do. You got the list right here for you. Yeah, so VRTX, there we go. All right. So let's go ahead, jump back into the overview page. Right now, we have turned from 3 yellow lights to now 1 tick into the red. Therefore, the color guard is mildly bearish rather than neutral. And VectorVest does not advocate buying any stocks at this time. As we scroll down, we see the red light coming from the price column because we're now lower day over day and week over week. If we scroll down, take a look at the advanced declines, we were well over a 2-to-1 bias on the declines to advances. Now we're not even a 2-to-1 bias on there anymore. 55% of stocks moving higher, 36% of stocks moving lower. So clearly not meeting that indication, which is why we saw that yellow light right at the very top to begin with. And so therefore, we were holding off anyways. If I didn't get to all of the stocks that you guys wanted to see, I apologize. I tried to get to as many as I possibly could. If you already have the VectorVest stock advisory app or the VectorVest desktop app, sign into the desktop, pull up the analysis report, type in the symbol. You can do the same analysis on your own wherever you're at. If you're not already a subscriber, click on the link in the description of today's video. You can sign up for a 2-week trial and you can put it to the test because, as I always say, seeing is believing. And once you see how powerful this can be for you, you're going to be wishing you found this a lot sooner. Looking at the major indices, the Dow is now the only one still in the green currently, up about 0.4%. NASDAQ down 1.34%. S&P down into the red, finally down 0.1%. Overall, VectorVest Composite basically flat, but in the red slightly. So also, I will give one last shout out before we end here today. We do have the 28-day portfolio challenge coming up. So for anybody who's not familiar with it, give me 1 second here. Let me switch that over. And let me switch it. I think this is the right one. Perfect. So the 28-day portfolio challenge, it's absolutely free for everybody. Starts next week, I believe. I think next week or very, very soon. So if you haven't already signed up for the 28-day portfolio challenge, make sure to do so. It's completely free, whether you use VectorVest, whether you don't use VectorVest. This is something that can help you, teach yourself proper trading techniques and behaviors to help become more systematic in your approach rather than an emotional approach. Let's see. Just take a look. Let's see if it has the dates here. But yeah, the website is vectorvest.com/28. You can see it's free for everybody. I'm trying to find when the starting date is. I know it's coming up very, very soon. However, I don't have all that information. Oh, let me just go ahead, back out of here. Let me go into here. Sign up today. There we go. Included in the price. So Josh, or Josie, excuse me, sorry. Any of the ones like the premium watch list are going to be in the premium mobile version. And if you have other questions besides those, yeah, just give our support a call. They'd be glad to help you out with that. I thought I had that here. All right, so I guess I have to go find that real quick, but vectorvest.com/28 to register for the 28-day portfolio challenge. Make sure to do that. We'll be talking about it over the next few weeks as these courses or as these coaching sessions happen with this desktop app. We're going to be going over them every single week with the mobile app as well. So, you'll get twice as many coaching sessions if you sign up for the event, hanging out here every Thursday as well. So on that note, I hope you all have a great rest of your trading day. Hopefully you've enjoyed today's session. If you haven't already, smash that like button, tell your friends and family, share this out with all your friends and family so they know about it. Help a friend in need learn how to manage their portfolio successfully. The challenge starts tomorrow. Thank you, Mirar. I thought it was the 17th. I couldn't remember. I knew it was in the next couple of days. But yeah, it's an introductory for the 28-day challenge. Starts tomorrow. So sign up now if you haven't already done it. Doesn't cost you anything. And it's going to help you, become more disciplined in managing your portfolio and learning proper behaviors rather than, trying to shoot from the hip and learn it on your own. So on that, have a great rest of your day. Have a great weekend. Be safe out there, and I will see you all next week. Toodles.